Welcome, ladies and gentlemen, to Commodity TV and a new edition of our online interview series. We want to talk now to George Paspalas, the CEO of MAG.TO. George, good morning to Canada. How are you?
Yeah, good morning, Jochen, and morning or afternoon to everyone else. I'm well.
Yeah, I think super. That's important.
Yeah,
Fantastic. I'm a shareholder of the company. I
good.
want to disclose that upfront, of course. And honestly, I must say that looks all fantastic. You had just released your first quarter financial results, also production results,
Yeah,
and honestly, I see a lot of upside here. That looks fantastic.
yeah. Now, I hope next time when you announce you're a shareholder, you use the word in front, happy shareholder. Okay.
Oh, I'm always happy when I see you, of course.
That's good. But you're right. We're very pleased with the first quarter. We 4.5 million ounces of silver, which equates to 6.4% of equivalent ounces of silver. In line with, say, fourth quarter of last year. And so what we're seeing now on a production side, a good stable run rate at the nameplate of 4,000 tonnes per day, but at the operating time of 93%. So, that's sort of the tonnage going forward until we start to optimise, which we're turning our heads to now. The grade is a very positive story at the moment, Jochen. I mean, Juanicipio has always been a high grade property, and we've proven that with time, but we're anticipating, an overperformance on the grade for some time to come, and a really good, perhaps more detailed explanation to that is in the technical report webinar that is on our website, magsilver.com. And there we explain the effect of the inferred veins, Ramal and Anticipada, which are not in the technical report in any mine plan and any economics because they're in the inferred category and you can't use them in determining reserves in the mine plan commensurate with the reserves. So that's one of these, another example of the adage at Juanicipio that the gift keeps on giving. And, the Ramal vein is quite interesting. The principal vein, I think most people who know the story, is the Valdecanes vein, and we're mining that. But the Ramal vein splays off that. So it's like a shoot off that main vein. And, it's running high hundreds up to almost 1,000 grams per tonne silver. And we have to mine it now. Otherwise, we sterilise it because we can't come back and get it later for geotechnical reasons. And so all we do is turn the jumbo 45 degrees and we're into Ramal and we mine these veins together. And it's giving us a sweetener to the grade. Now, it's inferred. Again, if you look at the technical report, you'll see there's a couple of million tonnes in there. But we're drilling that this year with Fresnillo to sort of get a better handle on it such that we can more accurately predict the future. But, grade is always a good thing if it's better than you thought. We reported cash operating costs of $2.50 an ounce.
That's crazy good.
Yeah, all-in sustaining cash costs of $6.11 per ounce of silver sold. And we're happy with that because we only started this plan up about a year ago. And we hit nameplate in Q3 of last year. And a lot of 2023 was focused on getting rock from the start to the end, making a concentrate and just pushing stuff through. Now we're turning to optimization. So we hope to be able to continue to deliver those sort of costs. And with silver price where it is and potentially where it's going to go, that creates a good margin. And so you saw in the first quarter, we returned $17.5 million of free cash flow back to Vancouver. And that's important because that number is post the tax bill for last year and a number of expenditures that are a little bit one off in the first quarter in Mexico. So all in all, we were very pleased with the fourth quarter of last year, but we are
Mhm.
extraordinarily pleased with the first quarter of this year. And we intend to keep that sort of momentum going through the year.
Yeah, yeah, absolutely. I want to go a little bit more into the detail with those head crates because that really catched my attention. If I look at your list here, the silver head crate went from 363 grams to 476. That's fantastic. But also the gold head crate went from 1.07 to 1.33. Lead went to 1.35%, and zinc was close to a double to 2.5%. Um, is that now the speciality of that vein you said, which you mine in like parallel, or is that a function of the ore you are mining? Because that with the silver also you get higher grades with gold, zinc, and lead.
A lot of it is the function of this Ramal vein, and then we have
Mhm,
another one called Anticipata, which will contribute to the production going forward. And we're hoping that this will continue for a few years. Right? As I said, we're going to get a little more um, concrete understanding about
mhm,
the extent of these two. Um, and Jochen, there's more. I mean,
mhm,
remember, the Val de Canes sits on an upwelling zone. So any structure, right, that can form a vein will be a mineralized vein. And we've got those offsetting 90-degree Venatus veins as well. We haven't really touched those yet.
mhm,
Um,
mhm,
they could potentially also return high grade. So, and the other thing is that on the remember our last technical report was done in 2017, and we wanted it was a PEA, and what drove a lot of the fact that that was a PEA and we didn't really declare reserves until we got into production was the fact that you know up to a half or maybe slightly over half of the mineralisation that we know at the moment in Juanicipio is in the inferred category.
mhm,
And the problem is if you don't include inferred, you actually mislead investors, right?
mhm,
Because you're cutting off half of the face. And what's significant here is that some of that face that didn't make it into the reserves because it wasn't drilled to adequate closeness um, is what we're mining now, and it's high grade. The overarching though, the drilling, like tightening up the drilling from 2017 to the technical report of March of this year, the zinc and the lead, but particularly the zinc grades, increased a lot as we tightened the drill spacing. So that augurs well for the future because, again, I mean, the technical report presentation in that webinar is a pretty insightful uh, piece of information to understand Juanicipio and moving forward. And in particular, um, the silver grade in all these epithermal vein systems tends to go down as you get deeper, right?
mhm,
Ours is offset a little bit by the fact we've got a boiling zone deeper down in it, but it still generally goes down.
mhm,
It's not going down as quick as we thought it would go down because of these other veins. Okay, that's a bonus. But as it goes down, the base metals are climbing. And so in the presentation on the technical report, you'll see the silver grades declining uh, progressively over the next few years. But with the base metals climbing, if you look at the cash flow projections, they're relatively flat. And so,
mhm,
the base metals compensate for that declining silver grade.
mhm.
But
Wow.
in a forward-looking statement here, Jochen, but there's
Yeah.
every chance that we may find other structures that have higher grade, and we can push that decline in silver grade into the
Mhm,
future. And
mhm.
look, it's a wonderful occurrence to have this beneficial grade when
Yeah.
you've de-risked the plant and it runs well, and
Mhm.
you've got today $32 silver.
Absolutely. And honestly, as you know, the $32 silver was always my breakout level.
Right. Right.
So we made it. My chart signals green light, go for it. The next target is 38 and then 50.
Yeah. Well, you must have
Think,
you must
thi-
have your green pants on today because you're lucky, right? You're lucky.
I'm fully loaded up with that stuff. That's the good thing with it. Yeah, super. No, so I think that yeah, that all looks fantastic, honestly, because you have only touched 5% of the ground so far. So there will be also, let's say, more exploration.
Yep.
The more you are mining, so you can do that in parallel.
Yep.
I think that's also super cost effective, right?
Very right. I mean, we probably half of our meters drilled last year and this year will be from underground,
Hmm.
which from an infill perspective and even step out is very cost effective compared to drilling from surface. But we are drilling from surface, and we're drilling a greenfield target, actually, south of the Valdecanes vein, and you know maybe we're encroaching outside that 5% area now, and we hope to do that over the course of the next few years because there are some very it's a very prospective piece of property, and there's compelling reasons why there's probably another one, two, up to three of these fluid upwelling zones on the joint venture ground.
Okay, cool. I want to come to your technical report, but that's from the 27th March. I mean, it reads extremely well with $1.2 billion after tax NPV. That's
Yep.
also important. 13-year life of mine with a cash flow of $130 million exceeding, etc. So that is all fantastic. With what numbers have you calculated that? First thing, and to me, it looks more like extremely conservative, the 13-year mine life, because what you have in your hands,
Yeah.
my feeling is you can mine that the next whatever 30, 40, 50 years.
Look, your kids could be mining at one Scipio. Jochen.
Yeah, that's good because my grandson
Yep.
is here behind me
Good.
sleeping.
Well, get him to watch the video and start practicing shoveling. Um, the, but the constraints of 43-101 are such that your mine life's based on your mine plan, and your
Mhm,
mine plan's based on your reserves, and your reserves do not include inferred. And as I said, yeah, so there's a significant portion
mhm,
of inferred resources here, and I think there will be for a number of years. So
mhm,
it's part of our job as management just to make sure that investors are aware of what you see in the reserve package isn't the whole story.
mhm,
And we're seeing that right now with Ramal, for example, Anticipata
mhm,
to come, then there's pre-Anticipata, then there's the three Venatus veins. So, it's sort of, you could blow your brains out and spend a lot of money by drilling all this off on day one, but we don't think
mhm.
that's value add.
Yeah, exactly. Yeah, yeah.
These are structurally controlled. Uh, the mineralization is structurally controlled. So you see a photo of the face, you can see the vein, and it's silver in the middle. And where there's
Mhm,
no silver, it's black. So the drilling is not essential, but it's nice to have as a predictive tool, and the
mhm.
ability to make longer term plans and guide investors appropriately.
Okay, super. I want to come back also to your key mine performance data of Juanicipio because your cost side is outstanding, right?
Mm.
And I remember, I think in the first P8 it was $5.05
Yeah,
all in sustaining costs what you calculated.
yeah,
Today you are at $6.11. So, and with this inflation, that is
yeah,
still fantastic, I must say.
yeah.
So the question is to me like, do you think you can stay in that cost spectrum, let's say around the $6, or do you see it more moving, let's say, to 7 or 8, which is still outstanding? But
Sure.
what is your feeling from the cost side and also from the investment side? What else do you need now? Because I think the big investments are done.
That's right. There's two more. Uh, I wouldn't even call them big, but there's two more significant investments to be made at the property. The first one is the construction of the second tailing cell,
Hmm.
and we're preparing to construct that now, and that's about an $8 to $9 million project that'll spread out over probably 12 months. The other project is a conveyor from the crusher underground to the stockpile that feeds the mill on surface. We're currently trucking the material. We have built a tunnel to put the conveyor in, and we're just doing the engineering work now. Now, this is more like a $25-30 million job, but it won't start until probably the fourth quarter of this year. And that's about an 18-month job. So during the period of the spend of those two capital projects, $6.11 will be challenging to hit, right? But it's not going to be significantly higher. So, if, as you said, if we can maintain our costs, well, you see, our guidance is $9.50 to $10.50 per ounce of silver sold. If we can beat that by any margin, I think it's a great outcome.
Yeah, absolutely, because you are investing in the future.
Correct.
That's important.
You have to.
So, and then for the future, the costs might go back again.
Well, the conveyor belt, I'm only putting it in because if you do a cost trade-off study, it's more effective long term to spend the capital and get reduced operating costs by not running the trucks, also not burning all that diesel. And so you have an ESG consideration on that as well. So it's a very beneficial project for Juanicipio.
Okay, super.
And the tailings dam you have to do because everybody needs to go to the toilet. Mine plants need to go to the toilet as well, and that's the tailings dam. So you have to have it built, right?
Absolutely. And also this lasts also longer. That's not only for 1 year, of course. Fantastic. Before we come to the Larder and the Deer Trail project for a short update, I saw also you are doing, you are renewing your normal course issue a bit. So you also think, like myself, that the shares are undervalued.
Look, I think the technical report release took some of the pressure off the stock. I don't know, but I feel there was some headwinds on the stock because people thought we've seen a few technical reports lately. They tend, the grade's a bit lower, costs are higher, they're generally negative. Here comes another one. Let's hold back, or maybe let's get ahead of this. And I think once we released that report and went through the webinar that explained it to people, we started to get a lift. You see in the technical report, we show our NPV, and we show our NPV at $23 and I think $28. We'll have to make the graph wider now to get into the 30s. If we feel that we are trading at a discount to our value, we will buy back shares. Right? If we feel that we're not, well, there are other sources of capital allocation that we'll consider.
Absolutely. Yeah, and what I also always found, I mean, we are talking since many years of that, but you have no debt.
Yep.
I think this is one of the biggest positive things you can have because nobody can pressurize you.
No, that's right. And, we have a undrawn $40 million revolver, but that's like emergency use only. I mean,
yeah, exactly.
It's nothing that we consider using at all. And we also filed a shelf prospectus, I think the day before the NCIB, and people are going, shelf prospectus, NCIB. Both of those items are just part of normal housekeeping for a company that has grown up. Right, we're now a producer. Most mining companies have a current shelf prospectus available to them. I think, given the pressures that the stock's been under, an NCIB is a no-brainer. And as I said, when we feel we're undervalued, we'll buy it.
Absolutely. Yeah, and also you don't need money. I mean, you are now harvesting.
No, that's right. We're intending to. Like I said, we paid the tax bill. We brought back $17.5 million in Q1. We realised a silver price of $23.73. So, as we go forward through the year, that realised price will increase. So another forward-looking statement could be maybe the cash that we're going to bring back to Vancouver will increase too.
Okay, glad to hear that's a Hollywood profit. I like that. Okay, let's talk shortly about the Larder project. What's going on there? How was the first quarter
Good.
with
So,
Cheminis?
yep, Cheminis and the Bear, we've drilled those to an extent that we're happy with at the moment. And our initial objective was to prove that the rock sequence of the Cheminis mine above extends at depth. It does, and we've found good grade there. And the Bear shoot continues at depth, and we've found high grade there as well. So we've considered that because these are shoot type structures, there's probably a limit to the size of those. But this is on the first order structure, the Cadillac Larder break. There's a second and third order structure that run off that. And that's where there's been more of the recent discoveries, the Upper Beaver, Upper Canada. Now, these are geologically, structurally different to what you typically find on the Cadillac Larder break. They have the potential to be a lot larger at Larder. That's what we're looking for. And so, the second half of this year will be focused on that. For $3.2, I think, million US, we purchased some adjoining ground, which sits over the top of some of the second, the third, and another order break, Gold Stake. And it has got relatively a very small amount of exploration, but it's got some ounce type grades that have been returned. And so it was in a private company. We were able to get it, and it just completes, significantly adds to the land package there for us. And we're excited now to sort of, okay, let's complete our drill program here. Let's have a good look geologically at Larder, where we might want to drill, and then next year we'll plan our strategy. But the bottom line is we've had success proving what we set out to do this year at Larder, extending the mineralisation on the Cadillac Larder break. And now we're turning to real grassroots exploration, looking for a new discovery on the second or third order structure.
Okay, super. And Deer Trail, maybe a short comment on that?
Yeah, Deer Trail continues to show that it's big. There's a lot of mineralisation there. We're still finding smoke, but we want to find the fire. And so we're looking for our principal aim here is to find silver-driven high-grade mantos or chimneys, carbonate replacement deposits, similar to the Deer Trail mine. We're actually looking to find the mineralisation that fed the Deer Trail mine. So it takes a while to put this story together because the system is in a geological term complex, which geologists love. I know investors hate the term complex, but trust me, with geological complexity comes good things.
Normally, yes.
Normally. But it takes time, right? This takes time.
Absolutely. Super. So all in all, we can say it looks all fantastic.
Yes, we're very pleased with the first quarter, and we're hoping the second quarter is the same. And as we move through the year, we're going to build the cash in our balance sheet. We get to $90 to $100 million, which gives us a 3-year runway, which we think is appropriate for a company that doesn't control its cash flow. We're not the operator here. And then we turn to allocation of capital. It's a great time in the history of MAG to be able to start to think about, okay.
Definitely. Yeah, I would say ready to rumble.
Ready to rumble. Yep. We've got ourselves strong. Let's look after the shareholders. That's the objective going forward.
That's a good idea. Would that mean maybe dividends in the future?
Yeah, it's a trade-off between where our valuation is, where we're trading, and does buyback make sense? Do dividends make sense?
Yeah.
Right. And and always having cash on the balance sheet, because if you have success at one CPO in exploration, larder or deer trail, you might want to feed that beast to bring it up the development pathway quicker.
Yeah, absolutely. And also, it makes no sense to dilute shareholders, right?
No, no,
When you can do it from the normal cash.
correct. And I think
Yeah,
that's what makes us a unique proposition. We're a production
yeah,
company with
yeah.
very high margin, extraordinary long life.
Hmm.
We have a couple of really nice exploration assets, notwithstanding probably maybe our best exploration asset is Juanicipio. Um, but we don't have to go externally now to fund
Mm,
those,
exactly.
right?
Yeah.
So,
As I said, no pressurizing.
no,
And that's fantastic.
yeah,
Super. Hey, George, thank you very much for that really long update, almost half an hour, but that's
sorry.
fantastic. Always great to talk to you. Many thanks for your valued time. And I must say, congratulations to you, the whole team. You guys did an exceptional job. And as said, now is the time to harvest. And as I say, swim like a Swabian.
Yep, I love it, mate. Bring it all.
Yeah. Me too. Super. Take care.
Thanks,
Thank
Jochen.
you very much, John.
Okay,
Thank you.
bye.
Yeah, thank you. Yeah, ladies and gentlemen, it was George Paspalas, the CEO of MAG Silver. You heard it. Everything runs fantastically. The company is doing an exceptional job. The first quarter was even massively better than the last quarter of last year. And what I love personally is higher grades on all metals. That is the first thing. Secondly, those costs with $6.11 per ounce of silver equivalent. That is absolutely fantastic. And don't forget, silver today is $32.20. So that is beautiful. And also, the company has no debt. And this is something in a world of debt, which I really love because nobody can pressurize them. They are not dependent, they are not paying interest, and they have all the flexibility they want to have for their projects at Larder, at Deer Trail, and of course at Juanicipio. And don't forget, this is only 5% touched at Juanicipio. So there's much more to come. It looks great. Make sure you have some MAG Silver shares, as I do for sure. And yeah, have a look at it. Thanks for watching us, and bye bye from Switzerland.